Okay, well, good morning. Let's go ahead and sort of pick up where we left on Wednesday. I'd like to just kind of start by doing a review, just using what I've already put up on the board, so that we can make sure we're all on the same page here. So we are working on the statement of cash flows, and what do I have up here? This 1, 2, and 3, what is that? Why do I have the 1, 2, and 3 by them? You have to do it in this order. So, and where is the income and loss number from your P&L? Where does that show up on a statement of cash flows? Which section? Operating. It's the first line item in your operating section, isn't it? What do we use our balance sheet for, and how many balance sheets do we need? You need a comparative balance sheet. What exactly does that mean? So you need your beginning balance and your ending balance. So if 1 month you need beginning balance December 1, ending the 31st. If you're doing a whole year, you need beginning balance Jan 1, which is the same as what? 1/1/15 is the same as 12/31/14, right? So if I was doing one for this year, I'd have a 12/31/14 balance sheet and a 12/31/15 balance sheet, right? And that would be my comparative balance sheet. What was interesting when we looked at the case that I gave you on Wednesday about the comparative balance sheet? What was kind of weird about that? It's backwards. We're used to reading from left to right, but for whatever reason, which I can't tell you what it is, that's just how comparative balance sheets always come out. So just kind of always keep that in the back of your mind. Just keep that in the back of your mind. Okay, so the reason we do a statement of cash flows, why can't I just look at my P&L to see, or my balance sheet to see my cash in and cash out? Why do I have to have a statement of cash flows to do that? Because we use accrual, right? We do our other financial statements according to accrual, and that's not cash. And we know that. You record things when they're earned, not when the cash trades hands. You record things when they're paid, not when they're incurred. So that's why we have to use a statement of cash flows. Okay, what are these 3 things that I've got up here then? Operating, investing, and financing. That's the 3 parts of the statement of cash flows. Now, looking at this, what goes in the financing section? Borrowing money, trading stocks, and what do you mean by trading? Just selling stock? Okay, buying and selling whose stock? Other companies or your own? Yours. Financing is your stock. I issue my own stock, and then I'm going to retrench, so I go into the market and I buy my own stock back. I issue bonds to borrow money. Purchase my bonds back. I pay dividends. Where does that go? Pay dividends. I'm only doing that because it's my stock, right? So that goes high on financing. But interestingly enough, when I pay interest, where does that go? That was a weird anomaly. That goes in operating. We're sitting right here. But it goes in operating. So just work through this again with me. So I issue stocks, I issue bonds, I pay dividends. That all goes in financing. But weirdly enough, when I pay interest, that goes in operating. So I don't know how you want to remember that. You just need to. What goes in the investing section? Okay, whose stocks and bonds? Somebody else's stocks and bonds. Why am I, if I'm a small retail organization or a mid-sized retail organization, Claire's in the mall, Why would I be buying and selling somebody else's stocks and bonds? Yeah, I've got extra cash and I want to invest it. I don't want it sitting in an account giving 0.03%. What else goes in investing? Buying and selling PP&E. Okay. What goes in operating? And that's where we basically left off. Mel, what goes in operating section? It's the difference, right? The change in them. Because anytime something like your AR, your AP, your inventory, your prepaid expenses change, what are those? That is the result of your day-to-day operations, isn't it? It's whatever I'm in the business of doing. I sell bling in the mall. I have AR and AP and inventory and prepaids and all that stuff because that's what I'm in the business of doing, right? Sorry. Cost of goods sold. All of that is going to flow through operations. Now, and then there's this other weird thing at the bottom, which is called what, without looking? Significant, non-cash, investing and financing activities. So those are the kind of, I mean, it's a mouthful, but not really. Significant, in other words, it's got to be consequential enough to put on here. Non-cash, in other words, if it was cash, it would show up in the main body, right? But it's non-cash. And it involves one investing and one financing activity. Oh, no, that's not always true. It could all be in one section. I'm sorry. It could all be investing. It could all be in financing, or it could be one of each. For example, what's an example of a significant non-cash?
I guess somebody gives you bonds in exchange for some property.
Yeah, bonds for land. What else? Well, bartering in general is operations. You cut my hair and I massage your back is a barter. And mostly that's we're trading what we do in our operations.
How is that different from like the stock versus?
Bartering is when we trade services one for the other. That was a fair market value tangible transaction. I want some of your bonds because I think it's a good investment, and I have a piece of land you want. Okay. Stock split was there. If I convert my stocks to bond or my bonds to stock, but I mean, obviously not everybody has these. I mean, they're fairly rare. Okay. Two methods, direct and indirect. We're using only indirect. I showed you everything that you got to pull together, your P&L, your comparative balance sheet. And then basically this is kind of where we left off. And today, or yesterday, or Wednesday, we started on just the operating activity section. And then obviously we've got to move into doing a whole statement of cash flows. So what are the three things that you have to do the operating section? So you set up your little title, cash flow from operating activities. Okay, let's start from the beginning. So I set up my title, cash flow from operating activities. What's the first thing that goes under it? Net income or loss. Did we get that far in the model? Okay, go ahead and put that down then under operating activities. Okay, we set up the model. That's where you left, Jeannie. We set up the model. Operating activities, we left a ton of space. Investing activities, we left a little bit of space. Financing activities, a little bit of space. And then net change in cash plus beginning balance equals ending balance. Everybody else have that model set up? And now we're kind of starting to go back and say, okay, what's the first thing that happens under operating activities is your net income. So let's get that filled in from the case study I gave you. Or loss. I mean, if you had a loss, it'd be a negative number, right? And that number was what? 35,000. So why is my net income not my net cash from operations again? There's all sorts of things that happen that were non-cash. AR and AP and depreciation and gains and losses on sale of land and assets. Okay, so where the heck do I start? I'm going to have a whole set of something, and this is a mouthful, but yeah, you need to memorize it. Adjustments to reconcile net income to net cash flow from operations. Adjustments to reconcile net income to net cash flow from operations. In other words, I got to take this 35 grand and figure out how to turn it into cash, but only from operations. Adjustments to reconcile net income, or if it was a loss, you'd write net loss. Net income to net cash flow from operations. And then the first thing I told you is you need to go scan what? From your what? P&L. First thing you got to do is go to your P&L and scan it for non-cash items. What the heck am I talking about? Gains or losses. How come those aren't cash? I mean, obviously somebody gave me cash if I sold something. Yeah, that's exactly what it is. It's selling price minus adjusted basis. Yeah, they maybe gave me $40,000, but I could have a loss of $2,000 or a gain of 12. That's not the cash they gave me. Where does the cash they gave me for that asset go? But which section? On the statement of cash flows. I sold my piece of land, I sold my equipment, I sold my cow. Which section? Yeah, it goes in investing. That's where we put all the cash from buying and selling long-term assets. So when I'm here and I'm just scanning the P&L for non-cash items, and I will tell you this is something students really struggle with. All you pick up in this section is the gain or loss. If I'm trying to go from income to cash and I have a gain on my P&L, am I going to add it or subtract it? Subtract it. Because it increased my net income, but it didn't give me cash. So I got to subtract it. If I had a loss, I sold a ranch. So I had a $196,000 loss. Did I write someone a check for $196,000? No. So if I'm going from income to cash, what do I have to do? Then I'm going to have to add it back. Really, honestly, I mean, there's a ton of things that can happen that can make this really ugly. But in our little world in here, the only thing you're really going to scan for and see is like depreciation, amortization, and gains or losses on sale of long-term assets or stocks and bonds. There's a lot of other stuff that can happen that can make this pretty ugly, like allowances for bad debt and all that, but we're not going to get so deep that nobody can get these things to balance. Let's just try and do a basic one. So if you go scan the P&L, what do you see? And then don't say it out loud, just do it. Write it in here. And then the numbers that are coming, we're going to put all the adjustments in here and then subtotal them and take them over. So I think you're going to be able to find two things on the P&L, and I want you to write them and then tell me whether you think they're a positive or a negative number. I'll give you a couple seconds, and then we'll move on to the next piece. So I think there was two things. So what did depreciation do on the P&L? Did it drop my net income or increase my net income? It dropped it, right, because it's an expense. Did it take cash? No, so do I add it back or subtract it? Add it back. How much was it? Gain on sale of asset. Did that increase or decrease my net income? It increased it. Did somebody write me a check for it? No, so therefore I've got to subtract it. Very good. And how much was that? 20? So now I'm just kind of going back up here and I'm going down these steps. I've got my comparative balance sheet and I calculated the change, right? We did that on Wednesday. We wrote in all the change. And you guys will have to set up that column on your own normally and do it. I just did it for you because you're just learning. Then the second thing we did, we picked up the net income, right? Threw it on the statement of cash flows. Then we scanned for non-cash items, just did that. Now we're kind of back to we set up our model. And so I guess now the next thing is start analyzing the changes in the balance sheet. Start analyzing the changes. In other words, every single change on the balance sheet, you guys, goes somewhere. Now, I just realized, and I guess I didn't have a hard think about this. If this was a full balance sheet, obviously there'd be more than just current assets and current liabilities, but what would the very first number be? Cash. It would have showed my beginning and ending cash. Where do those numbers go? Look at your model and tell me where those numbers go. Beginning and ending cash. All the way at the bottom. Net change in cash plus beginning equals ending. We don't have that on here. We're just doing a little mini case study to do the operating section before we launch into a full one. But the first number you're going to see on your balance sheet is cash. Beginning cash and ending cash. So you're going to go fill in those three numbers down at the very bottom of your model. And so you know what the whole bloody thing has to balance to, don't you? The whole bloody thing's got to balance. Now, and then I did say something wrong on Wednesday. I said if you get it to balance, you know you did it right. You could have still misclassified categories, but at least you know you've got the general, the numbers are somewhere there. Okay, so let's start going through every change in your current assets and current liabilities go into your operating section. So I don't know if you want to write that somewhere or maybe to the left of what we're working on here. Every change in current assets and current liabilities goes in to the operating section. Current assets, current liability changes. But that's exactly what we're going to write. So let's do the first one. What is the first current asset or current liability change? Sorry? AR. How much did my AR change by? $9,000. Up or down? Right. Decrease in AR. Why did it go down? Why does AR go down? I collected it. So is that an increase to cash or a decrease to cash? An increase to cash. So positive or negative number? Positive number. What's the next thing that happened? What's prepaid rent again? Back to what, week 4 of accounting 1? Huh? Did I even have any of you for accounting 1? I think I was done teaching it by the time you guys all came. Okay. So what did Olson tell you? What's prepaid rent? Why do you do that? Yeah, you might have a landlord that says if you prepay your rent for a year, I'll lock it in or I'll give you an 8% discount or whatever. So how come that doesn't all just go to rent expense straight away?
Oh, because you have to write in at the time.
Did you incur all that expense in January? No, it's for the next 12 months. So you set it up as a current asset, and every month you do what? You move a piece of it from your asset to your what? Your expenses. You take a little piece of that prepaid rent and you put it to expense. Right? You have a current asset, and then you use 1 month, 1/12 of it, and you take it out of prepaid rent and you put it in rent expense. If my prepaid rent went up, is that reflected in here? No. The rent expense portion of it would be reflected in there, but not the prepaid rent. So if my prepaid rent went up, is it because I spent it down or because I bought more? I bought more. So did that give me or take away cash? Took away cash. So what do? Add it or subtract it? Subtract it. How much was it? Okay. Go ahead and do the next 3 on your own. Tally it up, subtotal the changes, and give me what you think your cash from operating activities are. Oh, there's 4 more, I'm sorry. And just try on your own. You're not probably going to get them right, or all of them right, but just try and think through on your own. Why did this go up, or why did this go down? And did this give me or take away cash? Could do. I've used it a lot. I don't know if I'd be worried about that. Yeah, she and I talked for like half hours, but well, when I told you she hadn't called, I hadn't checked my landline, which I forget to do. She had called like prior days, 1.
You got an 82. Yeah, you got an 82.
There is a 4 point.
Yeah, so I got a 97.
Okay, so let's start going through them. What's the next one after prepaid? What does that say? One more time. Inventory. Did my inventory go up or down? Up. How come? I bought more stuff. Did that take or give me cash? It took cash. So what are we going to do? Yeah. And I'm sorry, how much was that? Took cash. All right. What was the next one? My AP went up. How come my AP went up? No, this is money I owe other people, right? Payable. Maybe it was my inventory. Maybe it was other expenses. But the point being is, it didn't really take or give me cash, but this is a little bit more complicated. Can anybody walk me through what their thought process was, Sherry? It was like you.
I kind of just thought that it's inventory, so it's like taking out of cash.
It might not be inventory, though. It could have just been my utilities expense.
Or, yeah, any asset.
Not necessarily an asset. It could be, right, so let's just for giggle's sake say it's operating expenses. What did those operating expenses do to my net income? Huh? Yeah, it dropped them, right? Did it take cash? No, that's why my AP went up. So what do I have to do? Add it back or subtract it? I have to add it back. Exactly. If my AP had gone down, that's because I paid down my AP. That's an easy one. Like, oh, obviously that took cash. You have to think a little harder about it when the AP goes up.
So AP goes up. So it's adding to net income.
When AP goes up, it means I had some expenses that I said I'm going to pay him later. Those expenses went through my P&L and dropped my net income, but did not take cash. So if I'm trying to go from net income to net cash, I've got to add them back. We'll say that over and over. Let me keep going.
I don't know if this will help, but I always think about the current liabilities whenever it's an increase on our change, then the increase on our statement of cash flow.
You know, I was going to teach it that way once, and I remember I found some exception, and then it made me nervous to say always. But in this example, your little mnemonic aid works beautifully. So did you guys hear what Sherry said? Do you want to say it again?
On the current liabilities, whenever there's an increase in change, then the increase.
Let's go with that unless we find some glaring example, in which case then we have to forget it. But at this point, I'm not coming up with anything that would counter that. So what she's saying is with current liabilities, if they went up, then you're you're safe putting that as an add back. Okay, what was the next thing that happened? Why would my interest payable go up? So what was the other side of that journal entry when I increased my interest payable? Yeah, I debited interest expense and credited interest payable. What did interest expense do to that 35 grand? It dropped it. Did it take cash? No, so what do I have to do? Add it back. And how much was that? 4,000. Okay, and lastly, what happened to my income taxes payable? They went down by 2,000.
It's because you hired one of us. But we messed it up somewhere.
No, we're clever. We saved him money. So why did the income taxes payable go down?
They paid their income tax.
Because they decreased the amount that they owe, right? So did that take cash or give them cash? Really? When you pay your taxes, the government sends you a check? It took cash. It took cash, didn't it? Okay, so if you subtotal all this, what did you get? How much? -5 +4 -1 -3 +3 +7. 5 grand? Positive? So just go ahead and subtotal it straight over. You don't need a title for it. Just right, so you do the whole column and then just bring it straight over. And then 35 + 5 = 40. And I'm running out of room, but I want you to all write in here. What's your subtitle here? Just what we were trying to get to. Net cash flows from operations. That was the whole purpose of this section, wasn't it? Net cash flows from operations.
And we can use that and do that.
Sure. So if you were telling me I don't know anything about accounting, and I'm like, okay, so the number's 40 grand, right?
I have a question.
Go ahead.
When I was doing that, I was putting them into two columns.
Nope, I want all of these lined up and then one subtotal. Just do it just like I got it up here, dear, because otherwise you start getting a bunch of numbers in and out. It's like, what am I adding and subtracting? You need to have this whole thing's done in two columns. Not everybody does it like me, but I'm the queen in the class, so that's how we're doing it because I think it's easiest.
Well, I think that's what you generally see.
You can, I mean, people do subs, and I mean, let's just do this straightforward. Okay. Okay, so my next question is, why did I go through all this? What piece of information do I get from this that I couldn't pick up off the P&L? My cash flow from operations. And this one, there's not a significant difference, but you know what it could have looked like? It could have looked like this. I had net income of 35 grand. Oh, jeez. Knock your own self out there. I had net income of 35,000, and I had a decrease in cash flow from operations of 140. Now all of a sudden, what are you thinking? Pretend that was the case. All my numbers turned into that. What can you construe from that? No, that's not really it. Huh? Still not quite there. I'm profitable, but what's happening? I'm losing a lot of cash, and that's happening for a couple of reasons. Either I'm selling a whole bunch of stuff and not collecting it, so my AR is just screaming up, and I'm not getting any cash. So I've got, great net income, but I just lost 140 grand from operations. That's usually attributable to, instead of a decrease in AR, your AR went way up, so you had really good sales, but nobody's paying you. Okay, this is a huge red flag that you would never just see from your P&L. I just lost 150 grand doing what I do, selling bling in the mall, because nobody's paying me, right? Okay, set up a whole nother model. I'm sorry, let me back up and give a little introduction. So we're going to do the Harno company now, which I just handed out. And this is, you've got a, well, you tell me what you've got. What's the top section? Yep, so you're going to have to manually set up a little what on the side there? Change column. Then what do you have below the comparative balance sheet? Got your P&L. And then I just want to read through the additional information and then I'll let you get started. Operating expenses include depreciation of 54 grand. Number 2, land was sold at book value. How much was land on your books at? Yeah, we'll work through that when we get there. I don't want to kind of jump into that, sorry. So just kind of put number 2 on hold. Number 3, cash dividends of 75 grand were declared and paid. For which account do you see cash dividends hit when they're declared? They do. No, never assets, retained earnings. Retained earnings. When you declare dividends, when the board declares dividends, that impairs your retained earnings. Then I've got some, a bunch of stuff happened with equipment. We'll spend some time on that. Number 5, bonds with a face value of 45 grand were converted in to dollar par value common stock. Don't say it out loud, but I want you to have to think about that. And AP pertains to merchandise suppliers. Prepare a statement of cash flows. What's the first thing that, so just so, I'm not going to ask you to reiterate this because we've talked about that. I'd like you to just start, get a piece of paper out, and do 1, 2, and 3. And then we're going to do 4 together. And when you set up the model, fill in the bottom 3 lines, please. All right, so once you set up your model, from this, you're going to pull your bottom 3 lines. Leave a bunch more space under operating than you do investing and financing. I'm going to put up here what I've done so far. I don't have to rewrite my model because I've got my smarmy little smartboard. What was my beginning balance in cash? How much? And what was my ending balance? So does everybody see then what the net change in cash has been? Negative 11. Right? So when I say fill in the bottom 3 lines, that's what I mean. These 2 numbers came from where? Current asset section of the comparative balance sheet, and then I calculated this number. So this whole thing has got to come to negative 11, doesn't it? How much was my net income? 101. Oop, I need that to be in red. So for Monday, you don't know how to do investing and financing yet? Why don't you figure out my net cash from operating activities for me? And also do do the questions. This is, I think, the only chapter I actually assigned questions in. Questions 1 through 5. And then E1 and E2. So for Monday, do the operating activity section of this. Questions 1 through 5 and E1 and E2. Okay? Awesome. And you've read the chapter, yeah? I don't know what pages it is, but you don't even need to bother reading about the direct method.
1 through 5 and Y.
E1 and E2, chapter 14. Okay, happy weekend.